Good morning, everybody. We have a lower trade across the board in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. July corn futures down 4.5 cents at 6.53 and three quarters. December corn is down 5.5 cents at 5.37 and three quarters. July soybeans down 15 cents at 15.59 and a quarter. November soybeans are down 10 and a quarter at 13.89 and a quarter. We've got July Chicago wheat down 13 cents at 6.85. July Kansas City wheat down 14 and a quarter at 6.33 and a half. The spring wheat market is off 9 to 10 cents. For those of you listening on the podcast, as always, really appreciate it, guys. Leave me a review or a rating if you have not already. If you're watching on YouTube, make sure you subscribe to the channel. I'm getting very close to that 2,000 subscriber mark. That's kind of the short-term goal here. And make sure you like these videos, help YouTube to spread them out a little bit. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you want to get some more in-depth information from me, my morning email goes out every business day at 6:30 a.m. Central Time. I have a text message service. I have subscriber-only videos and content where I get into a lot more depth in regard to grain marketing, the fundamentals of these markets, educational type stuff. Certainly check that out. $49 a month, billed to your credit card. Cancel it at absolutely any time. Get into the headlines here this morning. China bought more U.S. corn yesterday. USDA confirmed yet another flash sale, this time in the amount of 1.36 million metric tons. That's about 54 million bushels. China has been extremely aggressive with new crop corn purchases. We've never seen a new crop export program like this early in the year. China's already bought since the beginning of the month more than 8 million metric tons of corn. That's like 319 million bushels, I think, is about the total, just in flash sales. At this point last year, I don't even think China was at 1 million metric tons. So Chinese buyers, very aggressive buyers of new crop corn. They're interested, I think, in taking advantage of this inversion. You know, why buy the more expensive old crop when you can buy the cheaper new crop? I did a subscriber-only video and discussed that inversion yesterday for those of you out there. We'll see another ethanol report today from EIA. Last Wednesday's production print of 979,000 barrels per day was the third highest number in what I'd call the post-COVID era, still down almost 7% versus the same week in 2019. Ethanol prices continue to improve. Chicago ethanol swaps settled at $2.58 a gallon yesterday after bottoming at 81 cents a gallon in April of 2020. Phenomenal rally. Since the peak COVID panic back last spring. This was, again, the best close since April 2014 in those ethanol swaps. Production margins for ethanol producers largely positive despite these high corn prices because we've got such high ethanol prices. Ethanol stocks were down again last week. That encourages higher prices, of course. That report today will be out at 9:30 a.m. Central Time. Interesting to note, USDA projected last week that new crop corn demand via ethanol will rise to 5.2 billion bushels during the new crop marketing year from 4.975 billion last year, but still behind the 5.378 billion from the 17-18 marketing year. That's what's being projected. And 17-18 was like your last, pre-COVID full marketing year when it comes to ethanol. So that's a moving target, of course, certainly not set in stone. The Wheat Quality Council found above average crops in northern Kansas. The HRW wheat yield in the northern portion of the state pegged at 59.2 bushels per acre, up from 46.9 in 2019. I don't think they did an in-person tour last year because of COVID, but that's the highest yield for that portion of the state on record dating back to the year 2000. In regard to recent rains, a wheat production specialist at K-State said, quote, "It's definitely a multi-million-dollar rain, not only because of the amount, but also because of the timing." You've got a note here, one thing that's noteworthy. The tour is taking place 2 weeks later than it typically does, and that's something that, I mean, if you're to look at data and data only, you've got to take that into account, that the tour is taking place while the crop is perhaps a little bit mature than it would be in different years, and that's something that could impact the data. But I mean, overall, they're telling us the crop's really good, at least in the northern portion of the state. They'll be in the southwest portion of Kansas and south central Kansas today, and then I think they release a final yield projection tomorrow in the afternoon. U.S. weather forecasts are kind of variable. We're going to see kind of a flip-flop here in regard to rainfall. The trend here as of late is that a lot of areas out east, like Eastern Corn Belt have been too wet, and the West and the North in particular, like the Dakotas, have been too dry. And I've got the 7-day map here on my screen here. The East is going to be pretty dry. I mean, most of Illinois is going to be pretty dry. Indiana, Ohio, which have been problematic areas in some pockets, are going to be dry over the next week. And then your places that have been a little bit drier, like your Iowa, the Dakotas in particular, and a lot of Minnesota, they're going to see some rain here over the next 7 days. You know, an inch of rain or more being expected in a lot of these areas. So I think it's probably too early to say that weather is like bullish or bearish, but I'd say if anything, I mean, this is probably favorable for crop development. We know that they got the crops in fast out west and they were kind of slow out east, and now you've got a flip flop in the forecast in regard to rains and kind of like where they're going to occur. So certainly noteworthy. The U.S. dollar hovers near multi-month lows. We tested our February low in the U.S. dollar index yesterday and again overnight. We're going to see some minutes from the Fed later today. They are likely to essentially just confirm the Fed's stance regarding interest rates. The Fed continues to kind of stick to this stance that rates are going to stay low for the foreseeable future, out till 2023. Inflation is transitory or temporary, and that it's going to be short-lived. This is a huge debate among the macroeconomic community. Traders who are really in touch with the stock market and currencies and all that stuff are really debating just how long and how long lasting this inflation type stuff will be. And some people debate whether or not there even is inflation. It's one of the big things out there. But I will say that the Fed has an incredible power here. You raise interest rates and you change every financial market on the planet. It's that simple, and it makes a lot of things extremely complicated. The cattle market was higher in the fat cattle, kind of a mixed to lower trade in the feeder cattle yesterday. This has still been kind of a tough market. There was some light cash trade, I think 119 to 120 yesterday. Box beef market up again, $3.72 in the choice boxes, 320, 334. Select boxes up 216 at 299.05. In the outside markets, the Dow is down 317 points ahead of the cash open. The S&P is down 44, so fairly sharp sell-off in the stocks. Gold's down $15. U.S. dollar is higher this morning. We've got crude oil down to $1.31 at 64.18. Bonds down just a little bit, so kind of a risk-off looking day in the outside markets. Everybody have a wonderful day today. I will talk to you guys same time tomorrow.